Hello everyone, it's John here again. Today is June 24th, 2025. About 11:30 p.m. I'll get the disclaimer out of the way. These views are my own and do not reflect the views of the Department of Defense and are inherently apolitical. Now, jumping into it today, bit of a turbulent market. We saw the major indices increase across the board, all by about 1%, and the oil market took a hit, followed by a small jump in the aftermarket action there. Dixie took a hit as well today. Metals pretty much unchanged, a little hit there, and then cryptos are doing well as in addition to that. But going into it, the fraud continues. The manipulation of the fraud continues. Now, when you see the Dixie or the U.S. dollar get hammered, you got to wonder who's buying the debt to push the 10-year Treasury down. And it's got to be the only people who can move billions like that quickly. It's the Federal Reserve. They're doing some kind of backdoor manipulation in the debt market to the degree it's just disgusting at this point. But anyway, it's not like they haven't been doing that for the last 10 years. More fraud, more manipulation. What can you expect from these criminals? But going on from that, we've got the Iran-Israel ceasefire today. Couple pieces of information for you there. This is an article from CNN. We've got this was a leaked classified intelligence report. Can't remember from what agency, but basically showing that they're very skeptical we even took out the nuclear sites, the U.S. Air Force there. And you can read this for yourself, but this goes into the desires in each party of the conflict. That being Iran and Israel are just mutually exclusive in the Middle East. They're both diametrically opposed to each other. Israel started the war to denuclearize Iran, as well as the U.S. joining the war. And if this holds true and that Iran isn't denuclearized, then they could just make a nuke within short order. It's not like all the research was destroyed. Then at this point, why wouldn't they? They already got attacked. They've got nothing to lose by making a nuke. I mean, Israel and the United States has shown we're willing to attack them. Now, like, they're just going to make a nuke now. And if the U.S. didn't take out their production capabilities the first time, do you think they're just going to let them do it? I mean, just more wars coming down the pipe. Ignore the ceasefire. More wars going to happen. And we saw a couple engagements here, both Iran and Israel getting pot shots at each other. Iran launching a couple of UAVs, Israeli Air Force intercepting them. The Israelis trying to launch airstrikes back on Iran, and then that's when President Trump had his White House salon moment, where he used a little bit of profanity there, and then ultimately Israel stood down. But right now it looks like the ceasefire is holding. Don't expect it to hold in the long term. Both sides are going to rest and recuperate for a day or two, and then we're going to have more war in short order. This is another article from the day. Fed Chair Powell testifying before Congress, justifying keeping rates where they're at, saying that there's ongoing inflation. And that's the reason why he made that decision, and it's above his 2% target. You can read this article for yourself. One thing that's funny is you see pieces of the article like this. It just makes you crack up, where it sounds like they're surprised inflation is drifting up. And you got to wonder here. They're shocked inflation is drifting up, as if these two parties weren't responsible for it. Those parties being Congress, who has the power of the purse, and the Federal Reserve, who manipulates the debt market, both of which Congress spends trillions in deficit every year. And then the Federal Reserve also manipulates the debt market and mortgage market to the tune of trillions as well. Both parties cause the inflation. And then you have some clown show like this where they sit down. They sit down and then they're shocked. Well, why is there inflation? One asks the other when both of them did it. They know exactly why there's inflation. Just look at the last 5 years. They're the reason there's inflation. They're chiefly responsible for it. So it's all just more circus for people who don't know what's going on. They know exactly what they're doing. And then they're going to have a conference like this or a testimony in Congress for this stuff. And it's all just show and circus to basically satisfy the people and make it look like they aren't criminal. But in reality, they're chiefly responsible for it. But jumping into our next pieces of data here, this is in basic economics. You learn this stuff. Before any recession, you see an inversion of the yield curve. And we saw recently 10-year minus a 2-year back in 2022. The yield curve inverted. And before every recession, this occurs, going back for the last 50 years since the inception of the modern U.S. debt market. And then when that starts to uninvert, which we have been for a while now, recession usually follows here: 2008, 2000, 2020, 1990s. And it's a pretty accurate predictor there. Alone, people call it into question. They always say, well, this time it's different. This time it isn't going to hold true. But it's held true for the last 50 years. And when you combine it with other data like this, for example, manufacture new orders, durable goods, we saw recently that take a nosedive. During every recession, this takes a nosedive. That's the business cycle slowing down during a recession. And this goes back as far as the data on the Federal Reserve's website allows. And taken alone, this last bit here isn't much to work with. We'll have to wait till the next month to basically check, hey, is this going to have another hit here? And if it is, combining that with the yield curve and combining that with the Q1 2025 GDP results, real GDP results being negative growth, then that 3 indicators like that all holding true, lock and step should be kind of the alarm bells showing that we're in a recession. But anyway, this is another piece of data there in terms of that. This is the Shiller PE ratio, so the price earnings ratio of the S&P 500 going back to the last 50 years, and it's inflation adjusted too. You can see that the mean and median about 17.25 and 16.04 respectively, comparing that to where we are now, 37.13, so twice or double the mean and median and then some. And we're sitting near 2000.com bubble levels of overvaluation of the market. Who knows where the market goes from here? I could be wrong. And maybe they continue to keep this zombie stock market, this corpse of a stock market, just alive in perpetuity. But it already seems pretty overvalued, as well as this is the M2 money supply. One more thing I wanted to cover here. We saw this goes over a 5-year period on the Federal Reserve's website after 2020. Massive increase with quantitative easing. And then after 2022, inflation was very hot because, shocker, the inflation wasn't transitory. Who could have expected that? And then a massive decrease there. Not a massive decrease, a relative decrease when they announced their quantitative tightening, quote unquote. And then back up again. Now this last piece of the graph is what has me suspicious here. The quantitative tightening aspect explains why it decreased. Now, quantitative tightening is a relative term there. They aren't really quantitative tightening the economy. They are reducing the rate at they're doing quantitative of the quantitative easing programs they have. They're still pumping trillions into the market. They're just doing it at a lesser rate. But this recent increase, the Federal Reserve, according to the Federal Reserve, they haven't been ramping that quantitative easing back up. And we see the money supply growing, which is suspicious. It's either one of two things. Either the Federal Reserve in the background is manipulating something and there's some kind of funny business going on, or this could be explained by the research I'm doing into private equity and the massive bubble there. The private equity taking massive loans out to the tunes of trillions of dollars to buy up businesses, and those businesses, a lot of them are facing bankruptcy now. And that could be the powder keg for what we're seeing here in the potential recession. And then if not, if that collapses, a lot of people are going to be underwater anyway. But anyway, that's all I have for you today. I upgraded everything from my microphone here and this new editing software where I can jump between data that I have for you and my face. So it's a little more interesting of a video now. But let me know what you all think about that. I'm going to be continually evolving the production here. It's still a relatively new YouTube channel to bring you all the best content. So if you like the content, please like, comment, subscribe, and share it with your friends, and that would be a massive help to me. But that's all I have for you today. Stay safe out there, and I'll see you tomorrow.